everybody. I now convene the roundtable. Thank you for joining us. I had a 5-point policy speech, which I will set aside because I want to get to the main point of this morning, which is hearing from our briefers. I'll just say that when I go around my suburban district and rural district in New Jersey, climate change and energy transition is an issue that all kinds of folks raise with me, and not necessarily everybody who you would imagine. We have had massive storms that everybody understands in my home state are unusual, historically unprecedented, and incredibly harmful to us. Climate change for my constituents means 4 feet of water in your basement. But very interestingly, it's something I also hear about from the private sector in my district. Almost every company, medium or large, that is looking to hire young people for the jobs that they desperately want to fill tells me they are now interviewed by those young people. They're not just interviewing the potential employees, they're interviewed by them on their sustainability policies, because for the next generation, for very good reasons, this is the future. This is where the world not only has to go, but is going. And so if we think about it in terms now of our global standing and our global policies as a country, the only real question to me, given that the world is moving in this direction, the next generation is moving in the direction of adopting clean energy as the primary, if not sole, source of energy powering our economy, the only question is, does America lead that transition or not? Do our businesses, our workers, our research institutions lead the world to clean energy, or will it be a competitor to the United States, whether a friendly competitor like the European Union or an unfriendly competitor like China? That's a choice that we get to make. I think the business community is making it, consumers are making it. The government has not yet made that choice in a definitive way. Most of us, I think, on this call would like the government and the Congress to definitively make that choice as well. So we would be very, very eager to hear the thoughts of our briefers on those questions. We have, I think, first, Tariye Gbadegesin, who is an investment professional with 20 years of experience in the financial services sector, with over $3 billion of transaction experience. And she is now managing director and chief executive officer of ARM Harith Infrastructure Fund Managers. And I'm sure she'll tell us a little bit more about that. And then we'll go to Lisa Jacobson, who is the president of the Business Council for Sustainable Energy, a 55-member trade organization representing the energy efficiency, natural gas, and renewable energy industries. We'll start with you, Tariye.
Thank you, Vice Chair Malinowski, and thank you to the House Foreign Affairs Committee for the opportunity to share a bit of my experience and the work that we're doing around climate action in developing markets as well as globally. Just to give you a little bit of background on myself to make it better to place me, I am half American and half Nigerian. My mother is from Maine. She comes from the Wentworth families in Maine, and I am married a Nigerian out of the Niger Delta in Nigeria. And I was born and raised in Nigeria and spent all my summers in Maine, and had the benefit of working summers in family organizations in Maine and seeing my mother's uncle, who ran a furniture factory in Maine, build that factory up to be one of the largest employers, and then eventually have to close it down due to global competitiveness, and see what our family had to do to support those people to get other jobs, and to also see those cities in Maine that I continue to go back to in summers change and adjust also under the context of climate change. And at the same time, I'm also from the Niger Delta in Nigeria, which is home to the oil sector of Nigeria. And I grew up with Shell, Chevron, and Exxon drilling oil in the region, some better than others. And I've seen the impact of the energy sector on communities and economies. And so I have a bird's eye view around the interface of economic development and energy, and also around globalization at a very deeply personal level, as well as at a financial level. I had the benefit of going to college in the States. I went to Amherst College and I got my MBA from Harvard. But I've spent most of my career in infrastructure finance and emerging markets finance, mobilizing capital internationally into Africa. And I've spent the last 7 years in climate finance. And the fund I run, based out of Nigeria, is very active in the climate finance space. I am actually the co-chair of the Voluntary Carbon Markets Integrity Initiative, which is a global initiative to support the development of carbon markets. And it's supported by the European governments as well as European foundations. And I'm on the advisory council of the Millennium Challenge Corporation, and I'm also on the United Nations Principles for Responsible Investments Infrastructure Space Committee that does a lot of work around climate and guidelines for investing in climate. So it is on that foundation that I will give you some of my comments today, because a lot of my work has been around how do we use capital for purpose, capital for change. And I do believe that capital has a very big role to play in climate action, but of course, in partnership with the public sector. And so I just want to start by sort of speaking about the global points on climate action and the fact that it has become scientifically proven and established by both the United Nations and the IEA that we must limit global warming to 1.5 degrees above pre-industrial levels. And for us to be able to do that by 2050, we must halve emissions by 2030, which is 7 years from now. And that just speaks to the urgency of what we need to do as a global community to address the greatest crisis that could come to bear by climate change. But it's very important that we think about this in the context of developed and developing economies. While the developed economies have contributed significantly to emissions, you find that developing economies have contributed very little to emissions, but stand to experience the worst of climate change. So my home continent, Africa, currently contributes about 3% of global emissions. And if you take out South Africa and Egypt, it actually comes to about 0.55% of global emissions. But at the same time, we are all tasked to solve the problems of global emissions together. And it's important that all of us, both developing economies, the US, Europe, Africa, Asia, work together to establish their pathways and their specific pathways to solving this problem together. One of the takeaways from the work that I've been doing in climate is that every country and every region will have their own path to solving for climate action. We cannot use a one-size-fits-all across developed countries, developing countries. Every country has their own means with which they're going to solve for climate action, both from emission standpoint, as well as building resilience and adapting. But if you would permit me to take a step back as we think about the inflection point that we're on as a global society, energy has been the foundation for economies since the beginning of time, whether that energy was in the form of sugar, in the form of oil, and now in the form of new forms of energy. And the way governments, private sector, and capital is able to benefit from energy, control energy, rearrange energy, and create value out of energy is effectively the bedrock of an economy. And then everything else, how financial markets carve that up, and how we all sort of convert energy into output and product is ultimately how these economies are formed. But one of the things that we see and is really emerging about the threat to being able to meet these very specific goals around reducing emissions is that there are true threats, but I think there's sometimes it's not clear what the threats are. And I think what we're beginning to see, or I see, is that the greatest threat to reducing emissions is poverty. The greatest threat to meeting our ambitions and meeting our objectives is impoverishment. Poverty in developing economies and impoverishment in developed economies. Because if we're not able to create a path to addressing climate change in a way that does not create shocks for people, that allows people to be able to consume energy efficiently, affordably, and in a clean way, but at the same time does not shock economies such that there is a reverberation or there is a reaction, we would fail. And so I think it's really important for the global community to think about balance as we think about climate action and ensure that we are meeting the objectives of reducing emissions, but at the same time that we're thinking about the transition and we're thinking about a just transition with multiple hats. And I think this is where I'd like to go into the issue of competitiveness and America's competitiveness, which is the subject of this. The reality is that if energy transition is very much constrained by the people that will suffer as a result of it, because it comes down to people's futures and making the world a better place for all of these people by virtue of making the environment a better place. Now, the just transition has historically been focused on, and was all, in fact, that provision in the climate accord was effectively written for the coal sector. It was almost written specifically to find a way to get jobs for coal, the coal sector that would be lost. But the reality is that there are many emittive sectors beyond coal that need to be transitioned. And if we don't find a way to solve for transitioning the coal sector, transitioning other sectors that drive emissions, and for example, that would be oil and gas. There are many countries that are absolutely reliant on natural resources that maintain the status quo. And if we don't find a way for economies as a whole to transition and to transition to other forms of production, other forms of energy utilization, there will always be a pushback. There will always be inertia with us meeting these ambitions. And so that's why it's important that climate justice and the just transition is broadened to a lot more than just the repurposing of coal plants, but it is broadened to the repurposing of entire economies. The greatest thing about America is its ability to innovate, to be nimble, and to adjust because of its democracy and because of its nimble capital markets and entrepreneurship. And so this inflection point of energy, where energy is going to be changed, is a great opportunity for America to reposition itself with its strengths into how the world consumes energy. With my work, there are a lot of places that America has great value to add, but it's going to be important to think about partnerships and to think about where America is going to fit in that global economic exchange. A lot of markets are realizing this is no longer about talk, it's about action. 50 years ago, within the oil and gas transformation, American companies were encouraged and they were supported to drill and explore in regions of the Niger Delta, such as mine. It is important that countries that are driving clean energy, technology, and innovation for the energy transition are given that type of support. Because now, security of energy supply is not going to be about resources, it's going to be about supply chains. The security of supply chain is ultimately what's going to drive value. But now supply chains are going to be disparate. Supply chains are going to deal with different forms of battery metals, different forms of production, manufacturing, solar panels, etc., that go across the globe. And so how to think about reorienting partnerships to be able to benefit and to secure supply chains across multiple countries, but also benefiting domestic jobs is going to be key. It's important that America doesn't take a position that only with the growth of domestic jobs and the preservation of domestic jobs can climate action be central. It's important to think about how we can balance globally. How can we strengthen America's security of the supply chain around the energy transition to strengthen global relationships and to diversify foreign relationships, but to also strengthen jobs for America, as well as to strengthen jobs to improve jobs in other countries. Some key areas that have been, very sort of strong platforms for America in my work in infrastructure in Africa has really been around America's strength in technology, strength in capital markets, and also strength in specialized equipment, especially around emerging and enhanced materials, because materials are also going to be the future, new types of materials that can adequately store and can adequately transform equipment. But I think one of the challenges that we need to always overcome as America is the fear of the external. The American market is so large and it's so great and it's so understood that it's so easy for companies to get comfortable with operating in America. But to secure and to really push for the energy transition and for America to lead it, America is going to have to be great within, and it's going to have to be great outside as well. Another thing I think that's interesting about the energy transition and climate change is that it is led by small and medium-sized businesses to a great extent, because the giants are operating under another system. They need to disrupt themselves to be able to position for the new order. But what you have is a lot of young companies, you have a lot of emerging companies that are operating in this space, and we need to support them as well. But let me close on that point, and I'll be looking forward to getting your questions. Thank you.
Great, thank you so very much. And now let's turn to Lisa Jacobson.
Thank you very much. Thank you, Vice Chair Malinowski, and thank you to the House Foreign Affairs Committee for hosting this briefing. Really important topic for the work that I do as the president of the Business Council for Sustainable Energy. I'd like to just share a few slides with some data points in a moment, but before I do, I think the remarks that we just heard were so important in many aspects, and I just want to highlight at the highest level a few of the themes that I heard that resonate very well with the Business Council for Sustainable Energy and its corporate members. Number one, this is a public-private partnership that's needed if we are going to have a successful transition. And when public dollars are spent, we need to make sure that we are leveraging to the greatest extent the private capital that will flow. And so we need kind of the fundamentals for investment here at home, but also in other countries, both emerging markets, developing countries, and our developed country partners. And we also need to think about different types of instruments to do that. And, was discussed, environmental commodities, tools like emissions trading, or other mechanisms that can be used. Again, ultimately, what we're trying to do is create strong market signals. And, the U.S. Congress has a role to play here, both in setting our domestic agenda, but also providing support, as was described, which is very much needed, and U.S. leadership to support countries wherever they are on the transition. I would also say it is, again, a transition, and we need to think about this in a way that's not going to be more disrupting. We need affordable, durable, practical, and very aggressive moves to decarbonize our global economy. But it won't be durable if we are not bringing communities along. And as was described, communities, when we take a global perspective, as we all know, are in very different places when it comes to the transition. So again, I think this is an extremely important conversation. I really commend the leadership of the committee for having the conversation about how the U.S. Can work to support our competitiveness and to drive climate action. So I'm just going to share, and I will make this brief, I promise, a few slides that I think can be helpful context setting. Bear with me one moment. Thank you. Can someone just confirm, or with a nod, Vice Chair, can you see my slides?
Yes, we can see.
Okay, super. So I mentioned that I serve as the president of the Business Council for Sustainable Energy. We are a broad-based energy trade association in the United States, though we have companies that are global, of course, in their market orientation. We were founded 30 years ago, and very significantly right before the Rio Earth Summit in 1992. Our board, in its first action, sent a delegation of business executives to the Rio Earth Summit to say, U.S. business is here, we want to offer solutions, we want to have a public-private partnership in many of the topics that you're considering. And climate change and the United Nations Framework Convention on Climate Change was born out of that conference. Since that time, we've participated in every meeting of the process under the international climate change regime, whether it be, sub meetings or, ministerial level. Our industries have been there. And we have in the United States tremendous leadership, technological capability, and many readily available technology solutions, many of them affordable and deployable in other countries. So having a presence around the international and multilateral climate change regimes is extremely important for U.S. business, and happy to talk more about that. In terms of some of the context setting, I wanted to share some information from a report that the Business Council releases each year with an independent analytic firm, Bloomberg New Energy Finance, or Bloomberg NEF. It's called the Sustainable Energy in America Fact Book, and it is just that, facts, no forecasts here. But it's very up to date, and if you're looking at the clean energy transition, you know that if you're not looking at data that's in the last 6 months or so, you're probably looking at inaccurate data. And obviously, for the last 3 months, as we've started this year, there have been tremendous change, disruptions, and challenges for U.S. energy companies, as well as the global energy marketplace. So what I'm going to share with you today obviously goes through the end of last year, but happy to talk about what we're hearing in the current moment. For this conversation, I thought it was really important to share where we have been in terms of global energy transition investment. And this is data from Bloomberg New Energy Finance. They've been tracking for a good number of years a number of subsets. And over time, you can see that as we ended 2021, despite COVID, despite many other challenges in supply chains, we had a record level of global investment in energy transition technologies, over $755 billion. In the US, it was $105 billion, which is also a record breaker. What made up those figures? Largely renewable energy, electric transportation, and some new areas. And for us, very importantly, going back to making sure we're having a durable transition that's affordable, there are areas like hydrogen that are now popping up and doubling very quickly. And I will imagine when we look at 2022, the hydrogen investment, both globally and in the US, is going to rise very dramatically. When we look at where we sit competitively, one benchmark you could look at is, what are companies paying in the economy for energy prices? We're looking at industrial power prices here. The U.S. remains very competitive when it comes to power pricing, as well as other energy commodities. So this is an asset that we have. Now, how do we capitalize this as we move through the global energy transition? Going back to the theme of public-private partnership, in terms of record breakers in 2021, we also had a record breaker thanks to the U.S. Congress in passing the bipartisan infrastructure law, the Infrastructure Investment and Jobs Act. I'm just showing you here over $80 billion in public-private partnership investment across many energy sector segments, which I think is extremely important. We do need a diversified and long-standing research, development, deployment, and demonstration initiative at the national level, and this was a very strong positive step. But we still need more. Going back to what the previous comments, we need strategic investments, just as has been done for 100 years in the energy sector in the U.S., to energy transition technologies. So while pending, there's a significant set of climate provisions. The House knows this well, and clean energy and energy efficiency tax measures that need to be enacted as soon as possible. When we look at some of the challenges we have in the moment, whether it be supply chain related or tax policy or other policies and dynamics that are impacting competitiveness and market growth, passing these longer term tax incentives will provide a longer runway for companies and the sectors to manage these waves as we go through the next several years. So participation and having a seat at the table is extremely important for policymakers in the US in the international climate conversations, but it also is very important for the business community. And look forward to having an opportunity to answer questions. Again, I really appreciate the engagement on these topics by the committee. Thank you very much.
We'll now turn to Representative Houlihan for her questions.
Thank you very much, and I really appreciate the conversation. I share some of your backgrounds, having spent quite a lot of my time before joining Congress in corporate social responsibility and ESG movements through the Benefit Corporation and B Corporation nonprofit, and I understand that there's a meeting there happening in Nairobi right now. I don't know if you're there in Nairobi or where you are, but my questions have to do with CSR and ESG, and I think Representative Malinowski's appropriate comment, which is that I think that industry has embraced the importance of these ideas. I think that employees have understood and embraced the importance of working for a company that embodies their values and is moving in the right direction. And I think investors understand the importance of these kinds of efforts, with a lens in this conversation towards the environmental aspects of the conversation. My frustration is that that is not a thought that is shared by my colleagues here in Congress, particularly at the national level. I think at the statewide level here in the United States, a lot of our elected officials do understand the importance of CSR and ESG, but I'm frustrated that at the national level, they don't. Do you all, either of you, have any ideas on how we can better bring along our colleagues to understand the important role that national government has in incentivizing and helping industry do what they already are trying to do, which is the right thing in terms of ESG and CSR responsibilities? Look like Lisa has her microphone off.
Okay, sure. Sorry, just let us know how you'd like us to queue up. I see that my colleague has raised her hand, so I don't know what goes first, but I'll raise my hand next time. That's a good idea. I'll be brief. I mean, two things to note. The U.S. energy transition, as you probably are well aware, is underway, even with, the variation from the last couple of years due to the COVID-19, business conditions that the economy has been under. We have maintained emissions below pre-pandemic levels, both in our total energy use as well as in the electricity sector. We're 35% 2005 levels in the power sector right now, and that's where we've had the most significant transition. We're about 15% below 2005 levels from total greenhouse gas emissions, and transportation is, now the number one area where we have the largest sector of emissions. Then, we have the power sector, but there are many areas of the economy that really haven't started the transition in earnest yet, like buildings, the industrial sector, commercial sector, agriculture. There's a lot of opportunity here. I look at it as opportunity, and I think we need to. But what has driven that, especially in the last 5-10 years, has been the corporate community. And one benchmark you can look at is, I'm just going to give you one, but there are a few, corporate procurement of renewable energy in the last 5-10 years. This was zero, at one point, very recently, and now represents pretty much half of U.S. demand for renewable energy. The amount of corporate commitments, corporate contracts that are being signed in the U.S. for renewable energy was 17 gigawatts in 2021. And again, when you look at our deployment trends and you look at the corporate procurement pledges, we have a very strong forward signal going ahead. But again, it represents almost half of the representative bills for renewable energy in this country. So the business community is really driving significant clean energy transition.
Yeah.
So the second on ESG, the SEC, as you probably know, has a major proposal out there. Our members are engaging in it. They take this very seriously. They think the SEC is doing an appropriate task by trying to make information more credible and comparable. So, you know, the ESG movement is transforming from a voluntary kind of ad hoc foundation 10, 15 years ago to something which is now being incorporated by the Securities and Exchange Commission like never before. So I think things are changing and it's very positive, but we need the business community to be involved to make sure that it is durable and that it's done in a practical way.
And with the 30 seconds I have left, would you have anything to add? That's all right. I'm sorry, I can't pronounce your last name, Miss Gab.
Tariye.
And I'm sorry, I probably only have 11 seconds left. So maybe what I'll do is I'll go around the horn for everybody to ask their questions, and then I would love to hear your insight as well.
Do you have more time?
I have more time? Okay, yes, I would love to hear your insight into
The two of us, so.
how we can motivate. I know the corporate sector is on board. The problem is that the government, our elected officials believe that these kinds of concepts are socialism. They believe that this is something that is the government interfering in the for-profit sector. And I'm struggling with trying to figure out how to bring everybody along in this conversation, and looking to you guys for your insight to see if there's something that has worked in your experience. And I would love it if you would, Ms. Jacobson, thank you.
Thank you, Representative Houlihan, and thank you for your attempts to pronounce my name. ESG is something that's been very much an installed part of corporate activity and financing activity in the developing economies, because a lot of developing economies have to respond to international development finance or international standards in order to procure capital. And so by virtue of that, interestingly, we do have a lot of experience with ESG. And as the more developed markets are instituting the EU taxonomy and the SEC disclosure rules, you find that a lot of the developing economies are somewhat surprised that they've had to actually operate under those type of guidelines because they were responding to a different capital pool. But, you know, to ask you a question as to how to get buy-in into the ESG movement, from our perspective, ESG really started as a risk management tool, because what you discover in a lot of developing economies is that governments can only do so much. And especially as you're trying to solve for very complex issues, there needs to be the role of the corporate in how they interface with communities, interface with the environment, is such that government cannot always govern. And if anything, the idea is to create a system where corporates are using best practices to address environmental issues, social interfaces with communities and people, as well as instituting governance methodologies that would enhance how their businesses operate to reduce risk. And so what was found was that the more ESG you instituted, the less losses you suffered. And in fact, we were seeing better returns. And so in many respects, ESG was implemented in developing economies, and our experience, as a way to minimize loss. Because if you didn't invest for the environment and there were challenges with how water went into the community, the repercussions could be so significant. Now, of course, the underpinning is that I think the difference is in America, there's a sense that you can rely on the law. Whereas in other countries, the sense is that the businesses have to govern to some extent. Now we're moving into a different situation in ESG, where because we saw that companies that installed good ESG practices were higher performers, that there is actually a strategic value proposition to increasing returns when you have ESG as part of your strategy. And so, so a lot of us are starting to install ESG strategies for performance, but a lot of that involves measurement. And with measurement comes data. And that's where there's a lot of concern that you're shifting into compliance. So a lot of corporates are afraid of ESG becoming another compliance issue, right? And so there's a lot of fear when, and again, you can hear governments and corporates, they do not want another level of compliance. But if they believe it will lead to risk mitigation and to value creation, it's something that wants to that is embraced. It's the EU taxonomy is a few years ahead from the SEC disclosures, and even now there's a lot of frustration in the EU where a lot of companies are trying to meet the taxonomy as a way to get capital, and so there's folks are trying to build in EU taxonomy system so that they can get capital and they can sort of invest in companies that will be qualified as sustainable. So it can become tricky, and the real trick is to balance how to create guidance, best practice, encourage folks, and also have people comply to some extent without making it something that just becomes so difficult that companies effectively give up.
Thank you. And I will, I think I'm supposed to at this point go back to our staff members who are going to call on our next member for questions.
Yes, Representative Manning.
Thank you. Well, thank you to our briefers for coming with us this morning and talking about this really important issue. Ms. Gbadegesin, I don't know if I got that right, but I've tried it. Okay. I want to go back to your opening comments because they were thought-provoking. When you said that our transition will be constrained by people's futures, it made me think of some of the problems we've had in this country as we have attempted to transition. And one of the things that I think we've seen is part of the divisiveness we have in our politics today is the fact that as we transition away from certain jobs, we've lost a lot of working class jobs, and they were lost without effective transitioning. And I think one of the things that maybe we didn't focus on was that closing down jobs in one industry or in one area of the country isn't really benefited by opening up new forward-thinking jobs if they're not in the same community, if they're not in the same state, if they're not in the same region. And so what we've ended up with are not just people who've lost jobs and families that have been devastated, but entire communities that have been designated because communities are dependent on those jobs that have been shut down. So how do we do a better job at transitioning, learning from what we've seen happening in our country? Because it's not just the companies that need to get behind transitioning, it's also our voters.
Sure. Thank you, Representative Manning. And I think absolutely the challenge where you have communities that benefit from a sole plant or a sole manufacturing entity, and all the jobs and all the livelihoods are tied to that. And then when that becomes disrupted by climate change and a shift, you decimate the community. And I think I've seen this firsthand, and I sometimes reflect on how development economics is used in developing a market. So many of us study development economics, and I think there is a lot of concern in America to have planning, and there's a lot of concerns about shifting into a policy standpoint where you look at a microeconomy and try to strategize its repositioning. There's a sort of a hope that would happen automatically. And I think what we're seeing with the energy transition is that it doesn't happen automatically. And one of the challenges that I think you've also seen with these communities is that the types of jobs they had gave them a purpose. There was a spirit to the type of work they had. And they also don't want to go and do some sort of, other type of work that doesn't inspire them. Many of them want to do that type of physical work, and there was a pride that was associated with what they did. And so it's really important to think about strategically shifting jobs. And so some of the types of things that are being considered in South Africa, for example, as they're going through their coal transition, because South Africa has significant coal plants, and significant part of their jobs are for the masses are in coal. And a lot of the consideration is actually converting coal plants into manufacturing entities that benefit from the same underlying infrastructure. And so there's a mapping as to, can you tie that same infrastructure to a different form of, say, a battery metal kind of construct that would then tie into the green economy. But one of the challenges, and this happened on a PRI call that we had with South African investors on transition, is if you were trying to get a green bond, for example, to finance growth, the transition to battery metals would not qualify. And so again, as we're thinking about incentives for capital allocation, it's important to broaden those incentives to actually support countries and regions that are trying to shift into an alternative, not just the reduction, so that you can get those jobs moved. But yeah, it's very salient. But I think one of some of the things folks are thinking about is repurposing within the communities and repurposing with that type of infrastructure, but it's got to be a little bit more deliberate. And depending on the philosophy of the government, sometimes that deliberate style might not run akin to their philosophies.
So let me just, I'm out of time, but let me just say, I think we need to focus more attention on that aspect, because I live in a community that was devastated by job loss. It wasn't energy related, it was textile related. And it's taken us 20 years to start to replace those jobs. And fortunately, we now have several electric battery companies that are now opening, but it has taken years and years of work to bring those businesses to our community. We're hoping that will be the future. That kind of advanced manufacturing will be the future of my district, because it has been a huge struggle, particularly for not just for the city I live in, but all the surrounding areas that were less able to replace those jobs and probably are still struggling. I had a million other questions, but I will yield back to whoever. Brad's probably next in line, but thank you.
Yes, Representative Schneider.
The panel for joining us and sharing.
Brad, we
Get my
lost
head around.
Uh-oh.
Disappeared, Brad. Oh, there you are.
Can you hear me now?
Yes.
Just try to get everything. All right. Technical difficulties. Anyway, I want to thank everyone for joining us. And as we think about this, as I'm trying to get my head around it, I'm not a historian, but if I think about it in the context of history, in past, as we're doing pioneering periods into new technologies, new industries, interest tended to follow individual to corporate to governments and global. And as we look at addressing climate change, we start with the global challenge and are trying to align governments and then get corporations and individuals to follow. Financing obviously plays a piece to it. I guess the second half of as I'm thinking about this, what I'll throw out for the panel is, the challenge we face in any policy, but I think in particular here, is people never want to take steps backwards. And sometimes to get where you need to take a step backward or go down the valley to get to the other side of a different peak. And some of the choices we have to make are going to be very difficult. There'll be steps forward, steps back, but sometimes there's going to be big valleys that we have to cross. So in that context, as a lead up, what are things that we as policymakers, and in particular policymakers for the United States government, need to be considering to help create a broader global engagement, alignment of interests and goals, and development of strategies? And I'll open that up to anyone in the panel.
I'll go first. First of all, thank you very much for the question. And I think as you're identifying, I mean, we're talking about a transition which relates to change. And we're talking about an issue that, is born of science, but up until recently, was either believed it would be addressed on its own, maybe through oceans. If we go back, 50, 60 years, maybe the oceans would absorb carbon, maybe, we always, and I firmly believe, I'm a technology optimist, technology will come in and will help us solve the problems, but right where we are right now, the science is very stark and clear. I mean, the impacts of climate change are felt throughout the world, they're felt throughout our country pretty much universally, day in and day out, and they are accelerating. So it is more visible to the public now than it was maybe 15, 20 years ago, which I think, unfortunately, is beneficial to answering your question because it gives communities and individuals an awareness and then a stake in managing those risks and changing, more openness to change. But, we're still not at a point where we have that kind of consensus at the community and individual level universally in our country and around the world. So I think what you can do and what you are doing, big role is leadership, sustained leadership and information sharing about the facts of climate change and the facts of what we can do about it. So I think don't discount that role that you play as leaders in your own communities. And the transitions will not be easy. And they're not going to be without some disruption, as you said. But I think when we look at the opportunities, it will improve people's lives if we are purposeful and think about the communities first, going back to what we just heard in that conversation. It has not been that the conversation has started really at the community level. It has been more top down. And I think because of that, it's whether it be at the corporate level or even a mayoral level, like really down at the household level, has there been an understanding of your life will be better if we move down these directions to both decarbonize, improve our resilience, and also offer us new economic benefits for yourself and for your families. It hasn't really been thought about that in the 25 plus years that I've been working in these issues. It really has been a very high level conversation and an assumption that people would just come along. And as we know, people don't just want to come along unless they know that they have something beneficial for them. But we are also at a very different place in terms of technology, in terms of economic benefit and cost effectiveness of the transition. I can give you a lot of data on that separately, but there is a good story to tell here. And that's another area that, the private sector, community leaders, schools, we need to be telling that positive story of change. It's not all a loss. There's a lot of positive benefit for right now and into the future.
Thank you. And Ms. I'm sorry, I can't pronounce your name.
All right, it's all right. It's a Gbadegesin. The G is silent. Gbadegesin.
I can do that. All right, thank you.
Gbadegesin. Ignore the G. Yes, no, I'll just make a couple quick remarks on this. I think you're absolutely right, Representative Schneider, that I think the greatest challenge with this challenge that we're facing is that it's a global problem that started as an acknowledgement globally, and then we all have to correct inward. And while over the course of history, growth has been driven out from the individual, as you articulated so well. And so part of the challenge is that we now have to shift into a format where we have to start regulating behavior. And you're now regulating how corporates are acting because they're not acting fast enough. So even at a certain point, everyone agreed. The challenge is that people are not acting fast enough because now it's not just about minimizing emissions. It's that we need to minimize emissions faster and by certain timelines. The challenge is that the data is showing that we will not meet those timelines. And so in order to do so, we suddenly have to start regulating corporates. We have to start regulating how capital is allocated to corporates. We have to start, doing so much to try to get these numbers to balance. And I think that's where this is different from the past. But I think what is so what's similar about this is the opportunity. And I think the reality, whenever I'm in climate discussions, some of the talk is now about how do we show climate change as an opportunity? How do we show the change and investments that need to be made as an opportunity? And I think this is definitely an inflection point for the world. I think one of the greatest things about the energy transition is that with renewable energy and a lot of the new ways that you can consume energy, we can actually right a lot of the wrongs of the past with how we improve electrification and better forms of access and electrification for the world. The cost of electrification is getting cheaper. The types of jobs that we can get. I mean, for the first time, is it possible that America might actually have a manufacturing base again? So there's a lot that can come out of this. And so there's a great opportunity to leverage on these changes that are happening if we can almost sort of sell that bright future that comes from a world where we're able to look at a lot of our resources again and rearrange them for the green future. And I think that's not sold enough. But I think in 10 years ago, it was tough because solar panels were so expensive. Storage was just theoretical. The same way carbon storage is almost theoretical today. But Lisa's chart just showed how much progress we've made over the last few years. If you just see how much investment is going into all of these sectors, but how much more there is to do. So I think that's sort of the shift that needs to happen, is how to position American communities for these changes, for us to get this value, and to also show the investment opportunities that come alongside it. So that's I think something that we all need to switch to as we try to convince more of the actors to be more active and aggressive in climate action and the transition.
Thank you. Those were wonderful answers, and I look forward, hopefully, to continue these conversations, not with just the two of you, but certainly within our committee, on how we take on this critically important challenge.
Representative Manning will now ask a second round of questions.
Thank you. So Ms. Jacobson, you showed us that great chart at the beginning with all the tax credits that we have in place, but all on the right side of the chart, and then everything that was in the Build Back Better that we didn't get. And certainly our renewable energy investment tax credits and our production tax credits have encouraged American entrepreneurialism to build better, more efficient, more cost-effective means of producing renewable energy. So how do our tax credits and incentives compare to our strategic competitors, particularly China, but others as well?
Well, going back to, first of all, thank you for the question. And I would say at the top, our national climate policy, national energy policy has really been the tax code. If you go back to the early 90s, when the production tax credit for renewable energy was born from congressional leadership, to where we are now with the investment tax credit and a number of other important incentives from the tax code, that has been what's driven our transformation in large measure. That's the most potent federal policy tool we have had when it comes to our national energy strategy. Where it has been successful has mostly been when we've had a longer term opportunity to take advantage of those investments. For a long time, they were 1 year, 2 year, on and off, gap, retroactively provided, not as strong a market signal as we would like. What Congress is contemplating now is a 5 or 10 year extension of many credits and providing new ones in really critical strategic energy areas like energy storage, like hydrogen, like carbon capture, storage, and utilization. I could go on. There are many new areas that Congress is contemplating providing longer-term incentives. So how does that compare to our competitors? Well, go back to that chart that I showed you. In terms of global energy transition investment, which includes investments from the tax code, the U.S. continually is number 2 to China. So globally, we are not in as high a leadership position as we should be. We represent about 1/7 of that $755 billion I showed you before. Now, that's not all the energy transition investment in the global economy. This is a strong subset that BNEF looks at year after year. So, but it's an important benchmark. So we're not doing as much as our competitors. We need to do more. But what's extremely important is that any dollar is leveraged. We need to leverage private capital with the money that we spend. And it needs to be in sync with the investment cycle of these energy technologies. 1 and 2 years doesn't work for many technologies. It takes sometimes years to be permitted, to construct, and then to get the results. So we need to have incentives that match the business cycle of what we are trying to incentivize. So I'll stop there because I'm sure my colleague might have some comments on this.
Sure. Thank you, Ms. Jacobson, and thank you, Representative Manning. Just a point I wanted to bring in here is the issue of capital and capital allocation, because that's also, a significant aspect that drives change. And I think to date, the financial markets currently, I think about 40% still finance fossil fuels. And there's a need to create incentives as well for capital to be allocated to these other segments. Of course, through the tax code, if there are higher returns to be gained from companies that are making investments, then by right, there should be a trickle-down effect. But the issue is time. And I think one of the challenges is that right now we're dealing with a time-bound emergency. Which means that there really needs to there's a need to figure out how to get capital more increasingly allocated to renewable energy and allocated to energy efficiency and allocated to different forms of technologies that will drive that. Now, one other area that's is a stumbling block is the issue of stranded assets, and I think that's also something that needs to be contemplated. Is it's one thing to have capital that's going to renewable energy and drivers of the green future, but you also need investments in the interim. And that's so, for example, what's happening with the Ukraine war and the reality that you still need some, some sources of energy that are not renewable in nature, but are required for the transition. What is the investment framework for that? And because those assets should become stranded. And so by right, there shouldn't be an investment framework for it. So the thinking, and I don't want to use the word regulation as much as it is incentives around capital allocation and how do you incentivize capital allocation for the long run to align with those long-term incentives, but also to align with how you take down certain assets that should no longer be operational at a certain time, but they're still receiving capital because you're dealing with an interim problem. I think these are also very important.
Thank you. And thank you for giving me the second opportunity to ask questions. My time has expired and I yield back.
Thank you, Representative Manning. Member questions are now concluded, and we will now move to Representative Houlihan for a brief closing.
Thank you so much. And thank you so much to you both for joining us on this really, really critical topic. Very grateful to you for your time and for your expertise. We are hopeful that we will be able to bring these kinds of ideas and conversations to our larger conversations in foreign affairs and other places in the Congress. Very grateful to you once again for your time, and everybody please enjoy what remains of your Friday. The committee now stands adjourned.